The first 100K is the hardest. Well, after 2,405 days, I have finally crossed a £100,000 investment portfolio. That includes absolutely everything. My stocks and shares ISA, my various pensions, my general investment accounts, my crypto, but everything in mid-February crossed the £100,000 mark, and it's pretty mental. In August 2017, I had £0 invested, and in February 2024, I had over £100,000 invested for the first time. And actually, the point of making this video towards the end of March 2024, my investment portfolio is now up to £110,000 because of the great returns the last month or so in both the stock and crypto markets. And at the point of editing this now in August 2024, number one, I'm still wearing the same jumper, and number two, my portfolio is now up to £120,000 plus, showing the power of investing. It took me 6 years and 7 months, or as I mentioned, 2,405 days, but it feels good to finally cross the £100,000 mark. A lot of people reference this as being the hardest point to get to. 100K now is worth less than what it would have been 30 years ago, but it's still great to get to this milestone. And in this video, I'm going to share with you essentially how I built my portfolio up over time and give you 4 tips, or my biggest 4 tips on how I got from zero in 2017 to £100,000 in 2024. So let me run you through the 4 main things I did to get to this point, and I'll give you quite a few anecdotes and mistakes and tips along the way. Number 1, I actually got started, although I made many mistakes. I originally accidentally got started when I was automatically enrolled into my workplace pension when I was doing a placement year in London in August 2017. I then properly got started after, during that year, reading a lot of books, consuming a lot of financial education content. I actually got started in August 2018 when I opened up and started contributing to my stocks and shares ISA with some money that I saved from my placement year. So I accidentally got started in 2017 and then properly got started in 2018. But the main way I really got started was just £100 automatic direct debit every month into my Vanguard stocks and shares ISA. And that really still now today, 7 years later, is a staple of my investment portfolio. I made an incredible amount of mistakes at the start. I've ran through them in previous videos. I go into a lot of detail about them in my book, but paying really high fees, not using a stocks and shares ISA, using a high street bank, trying to time the market, looking at forums and Reddit to try and see tips of what stocks to buy. I literally made all the mistakes you could think of, which I guess ultimately is what led me to start Making Money Simple in 2019 to try and break down investing simply. But now I can really say, since probably 2019, the last sort of 5 years, my investment approach has been the same, has been solid, and it mainly consists of investing automatically and consistently into global index funds and global ETFs on the various platforms and in the various accounts that I use. But number 1, I actually got started, and what's great nowadays on so many platforms, for example, Trading 212, you can start with just a few pounds. Number 2, I utilized free money. Not many things in life are free, especially money. So when it comes to utilizing free money, definitely take it. This was mainly in the form of my UK workplace pension, where I got employer matched contributions. Although I'm currently based in Australia, for 5 of my 7 years of investing, I was getting matched workplace contributions from my employer. So as my salary was going up, they were matching more and more, and it was actually 6% of my salary. So I was putting in 6% and they were putting in 6%, and I was going into my workplace pension every single month. Many people have a pension but don't know how much is in it, what it's been invested into, which is mental to me. The amount of people I've spoke to over the years who have no idea, I tell them to look and they have like £70,000 in their pension. They never knew about it. But what I would say is get access to your pension, see what's been invested into, and it's probably in a very high fee, non-optimal fund. So my approach and what I've done in my own UK workplace pension and my recent Australian workplace pension is to switch the fund to as low as fee global fund as possible. So the lowest fee and a more diversified, that's what I look for and personally use. Of course, you may have your own approach. This is a bit of a tangent, but just get access to your pension. That's literally your money that's being invested. If you have a pension, you are an investor. Back to the point, I utilize this free money. So many people will get employer match and they won't take it, or they will like not make the most use of it, which once again is just crazy. You're literally having free money that's going into your investment pot, so make the most of that as much as you can. I also personally use a stocks and shares lifetime ISA for a couple of years. I ended up stopping using that, and I made a whole video on why I don't really like stocks and shares lifetime ISAs anymore. The bottom line really is a standard stocks and shares ISA or a standard pension or SIP is likely better for most people. But yeah, they were the two main accounts that I got, where I essentially got free money from my employer or from the government that went into my pot and is now compounding me for the decades to come. Number 3, this is a key one, avoided lifestyle inflation. And what I mean by this is, as my salary has gone up, I've generally not increased my expenses. In fact, every pay rise I've ever got invested most of the increase, and every bonus I've ever got, although the bonuses aren't that great in accounting, I've invested 100% of the bonus no matter what. So by steadily doing this over time has meant, for example, I was in the UK, I started at £100 a month, I then increased it to £250 a month, and then increased it to £650 a month into my stocks and shares ISA at my peak. That sort of steady increase has allowed me to essentially funnel more and more money into my investments, as well as any bonuses that I've got, and it's allowed me to grow my portfolio quicker. Now listen, I'm not saying you shouldn't treat yourself. Of course, if you get a bonus, you've worked hard, feel free to spend some on yourself. It's your money, you can spend the whole thing if you want to, it's up to you. Personally, I just would rather invest it, because I know the more money I can get invested, the quicker I'm gonna reach financial independence, and yeah, do what I want. So that's sort of my own approach. But I would definitely say, when it comes to your salary, when you get pay rises, at least invest a portion of that, because that will help you both combat lifestyle inflation, but also invest in more so you can build up your investment pot quicker. I mean, lifestyle inflation is so common. I mean, literally everyone gets sucked into it. Why people end up just working forever and ever and never retiring. Of course, I'm trying to avoid that, which is why I have been steadily increasing my investments over time as my salary has gone up. Number 4, finally, other income streams. So the main income stream that I built is this, making money simple, which, as I mentioned, I started in 2019. I essentially didn't earn a single penny for the first 2 years. I then started making money from it in 2021, and I've been making money from it since. Albeit it's relatively small amounts of money, it's nowhere near enough money compared to my day job, which is why I still work as an accountant and don't unfortunately do this full time. But each year I've paid myself a dividend, and that dividend I've then invested usually into my stocks and shares ISA. Secondly, I also opened up SIP in May 2022 with Vanguard, and I've got many SIP and Vanguard portfolio updates on my channel, but I was able to then tax efficiently withdraw money from my limited company into my SIP, so the money is then in my own name, it's invested. Of course, I can't access it till later on in life because it's a pension, but it's still in my own name, not just sitting in a company bank account, and it's invested into a global index fund, and it's growing over time. And number 3, not quite as lucrative anymore. In fact, it's pretty much non-existent for me personally, but there was a couple of years where I got quite a few free shares and free crypto from various stock investing and crypto investing platforms by people signing up and using my affiliate link. There are still some platforms I have links for, like Trading212, Free Trade, Trading212 and Crypto.com were probably the most lucrative ones for a couple of years when everyone was in lockdown and trying to invest into the stock market and crypto. But that, once again, is just free money I get. Someone signs up to Trading212. If you want to right now, the link's in the description. You get a free share, I get a free share. With my free share, I then always sell it and put it into a global index fund, and then let that global index fund once again grow over time. So they are the 4 main things that I've done to essentially grow my portfolio from 0 in 2017 to £100,000 plus as of February 2024. And luckily my portfolio hasn't dipped below that yet. So hopefully the markets continue to perform well and it continues going up. 4 main tips: actually got started, utilize free money, avoided lifestyle inflation, and built other income streams. Even if you can implement 1 or 2 of these, you're literally going to grow your investment portfolio much quicker than, of course, not doing anything. So I would say try and implement to some extent all 4 of these, and however much you have invested, whether it's £0, £1,000, £20,000, you can start building your portfolio quicker. And yeah, I'm very happy to reach 100k. I obviously have been sharing my portfolio and my investments when they were in the thousands of pounds. The fact they're now in the hundred thousands of pounds, technically, it's a very good feeling. So of course, thanks everyone who's watched these videos along the way. I hope those tips have proven helpful. If you've got any questions about this or anything else, let me know in the comments and I'll get back to you. And I'm probably gonna make a couple more videos on this portfolio in terms of what it's made up of and maybe a couple of ideas that I've got. So subscribe if you don't want to miss future videos on my portfolio. And yeah, thanks for watching. I'll see you in the next one.